Well, hello everyone. My name is Roger Scott. I'm the head trader for Wealth Press. Today is June 17th. We're more than halfway past June. I still don't know where the year has gone, and I keep telling you that every day. The days just get away from me. But let's get back into the market. Let's see what we got in store for today, and let's see what we've got cooking up for the financial system. Now, tomorrow, we've got jobless claims. And we've got Philadelphia Biz Outlook Survey. Those are the big events. Today we got Jerome Powell speaking. Yesterday he spoke in the morning. Today he's speaking at noon Eastern time. And we also have housing starts. Now, I'm not expecting a big move from the market. I'm expecting us to trend near the 200-day moving average. As you could see here, this is the S&P 500. We've been bouncing off the 200-day line. And I think price action is going to stay here because momentum levels are moving lower. So I think the most probable outcome is that price action is going to continue sitting right near the 200-day moving average. Remember what I told you a long time ago. Price tends to stick to these 200-day lines and the 50-day line. And right now it looks like price broke out a little bit, came back, but it looks like it's going to stick a while. And one of the reasons it's going to do that, and I explained this to you before, but I want to explain it to you so you understand again, is here. This is the secret to all of this. And I'll show it to you again. I do this almost every day, but I want you to see it because this is important. Look at the number of stocks trading above the 200-day moving average in the S&P. I know. The stocks, if you look at the chart, it's trading above the 200-day like we look right now. But if you look at the stocks individually, only 42% are trading above the 200-day moving average. That's telling us that the overall market is bearish. It's the market capitalization that's pushing us above the 50-day moving average, not the number of stocks. And if you look at the 50-day moving average, I mean, this is craziness. This is insanity. Look at the level we're coming off. We were near 100%, and look at this historically over time. Look at what happens. We're on the way down. We're on the way down. You can't really go higher. You can't go really more than 95% of stocks in the S&P 500 trading above the 50-day moving average. So this rubber band is stretched out, and it's just starting now to come back, and it's going to stretch out, and it's going to pull back, and it's going to stretch out and pull back, and eventually it's going to pop, and this number is going to come to the 30th level, and it's going to put the S&P 500, let me show you where. It's going to put the S&P 500 back to this level right here or below. And that, at this point, based on the momentum levels I'm seeing, that is almost a certainty, all right? So I'm very, very cautious with the S&P right now. I'm very, very cautious in terms of putting in trades, but I'm looking at the short side right now. And here is what I'm looking at. This is the Russell 2000. Look at the price action. It barely ever passed above the 200-day moving average, and it actually is trading now below the 200-day moving average. So if you look at the S&P 500, the S&P is trading slightly above the 200-day moving average. If you look at the QQQ, the NASDAQ 100, it's trading substantially. Oh, let me get rid of all of this. Notice it's trading way above the 200-day moving average. But if you look at the small caps, at the Russell stocks, look at this. They are below the 200-day moving average. And remember something, with the momentum levels in the S&P 500 being as overbought as they are, the odds are when the S&P cools off, and it will cool off, those momentum levels will not stay for a long time. When it cools off, you're going to see the full market come off, and you're going to see weakness, even more weakness, in the Russell 2000 stocks, and they're already below the 200-day moving average. So today, I wanted to pick two stocks that I would like to short. Both of these stocks, let me show you, they're making 90-day breakdowns. Yesterday, we talked about 90-day breakouts, but today we're talking about breakdowns. Both of these stocks, ARVN and FCN, are making 90-day breakdowns, and I want to show you something cool. Russell 2000, ARVN, Russell 2000, VCN, Let's go to profile. Russell 2000. Notice a pattern. Russell 2000 is getting weak. Two stocks breaking down into Russell 2000. Do you see where I'm going with this? Now, volatility hasn't picked up on the way down. Hasn't picked up on the way down. It looks like this is a long-term breakdown. If you look at the chart on ARVN, that's the ticker symbol, you will see that it's below the 200-day moving average. It's breaking down slowly. But if you look over a period, it looks like the stock has a lot to go. And it looks like there's not really a lot of support till we get to the 25 all the way down to the $15 level. This stock can really move south right now. And again, it's already trading below the 200-day moving average. And if we look at FCN, technically, guess what? It's also trading below the 200-day moving average. It took out the medium-term support level right here, or we're actually right at it. The RSI is a little overdone, but again, if you look over time, this stock looks like it's ready to come down. My advice would be to wait for it to break below $100. I would start shorting the stock when it gets below $100. That's the FCN stock. And ARVN, I like it right now. I would probably wait for it to break 29.50 to the downside, and I would start getting ready to sell. Here's the thing, folks. If you look at the VIX, index over time, notice it never went below 24. Anything above 20 is a warning sign that volatility is still hovering near highs, and volatility in the market is in fear zone, okay? So don't think that just because it went all the way to 66 and then all the way to 25 that it's coming down. When volatility is near 14, that's a low level. It's got to be below 20. Anything above 20 is telling us that market is in fear zone. We went all the way from 25 all the way to 33, and we're at the 33 level. My point is, this is not a time to be complacent, all right? Especially with the SPY literally bouncing off the 200-day moving average, not really making a lot of highs, and most importantly, momentum levels. Look at the overall stock market. And this is stocks trading above $2. Only 38% of stocks are trading above the 200-day moving average. That means 62% of stocks are trading below the 200-day moving average. So the reason you're seeing the S&P trading above the 200-day moving average is because the S&P has a lot of market capitalization stocks. And you can have 10 stocks like Amazon, Microsoft, Intel, because they're so big and strong, they can completely outperform and overshadow all the others. So it's very important to look at the markets from an inside out, especially right now when we're near the middle zones. When the market is raging bull or raging bear, it's obvious where everything is. But where it's right near the 200-day moving average, it's very important to look at the 200-day moving average, and again, the 50-day moving average. And look at this 50-day moving average on the overall market. Before we looked at the 50-day move at the S&P 500. I keep mixing up 50-day moving average with the S&P 500. But if you look at this historically, again, look at these levels. This is the overall market. Let me go max. Look at this. The two times we went above in the overall market was back in 2009. We went to 90, and look at this. Over time, we went all the way to 19. And how about back in 2004? Went all the way down, and again, we're here now, and it's like the market is stretched out like this right now, and it's just ready to pop, and this thing is going to come down. Don't look for a lot of upside in the overall market. And because the Russell 2000 is already trading below the 200-day moving average, and there's a correlation of about 80% between the indices, 70 to 80% usually, especially the S&P and the Russell instead of the NASDAQ, because the NASDAQ 100 has growth in tech, but the Russell has just smaller stocks, but they're broad stocks like the S&P 500. So you're going to see downside in the Russell, and that's why I'm looking at smaller stocks that are making 90-day breakdowns. So if you own FCN or ARVN, you may want to liquidate the stock, or you may want to start shorting the stocks. And again, let me give you those levels. FCN, I would like to sell it when it goes below 90, below 100, 99.50 would be a good price to sell it at. And the other stock was ARVN. Let's go there. These line charts are hard to read, so let me move it back to, yeah. And this one is ready to go. I like this stock to sell right now because it just broke down. And again, notice what I did. I looked at the S&P 500. I got a baseline. Then I looked at the NASDAQ to see if it's stronger or weaker. Then I looked at the Russell to see if it's stronger or weaker. Then I realized the Russell is the weakest, and then I looked at stocks in the Russell making 90-day breakdowns, okay? So I did everything top to bottom. That's how you have to look at the market. Now, you could very easily, actually, let me be very honest with you. I actually first went to the 90-day breakdowns. I found these stocks. I found that they were in the Russell 2000 because I was looking to stocks to short, and they're 90-day breakdowns, so they're weak stocks. Then I looked at the Russell and I did my analysis that way. So sometimes I'll start with the technicals and back my way into fundamentals, and some way I'll back into fundamentals and then go into technicals. It doesn't matter what alerts you to the stock, but whenever you're looking at the analysis, whenever you find the stock, you want to go back. Or if you start out with the broad view, then you'll end up with the stock. But this way, it's a very check off every criteria to go down to the next one. We see the market's weaker. We see the momentum levels, the 200-day and the 50 are overstretched, and the 200-day is moving lower. The market is bearish. The S&P is overbought. The Russell 2000 has been weaker for months, and for actually over a year now, almost 2 years. And if the S&P falls down, the Russell will fall more. And then we find stocks in the Russell that are ready to break down. And I'll bet you, if I was to keep drilling it down, I would find that these stocks are not doing that great because they're both already trading below the 200-day moving average. And whenever you see a stock trading below the 200-day moving average, the odds, especially with the overall market trading above the 200-day moving average, that's telling us the stock is not doing good at all. So I avoided doing the global analysis for you because I wanted to go a little bit deeper into the 90-day breakdown and explain to you why you should fade small cap stocks and why the market is overbought right now. I wanted you to understand everything from the top, from A to Z perspective. Now, I've got something big for you. With everything going on right now in the markets, I totally understand why most investors are fearful and pessimistic. I mean, look at the analysis I just did. It makes perfect sense. But not everything is pointing to more downside. Not at all, actually. We're getting a signal from the most informed investors that the world could soon be over for some stocks. That's right. We're getting a signal from the most informed investors that the worst could soon be over. That's right. That would be amazing. Now, executives are scooping up shares of their company stock at near record pace. So the people who have the most intimate knowledge of their own company are signaling that stocks are cheap. You've ever heard the term let the money do the talking, let the money do the speaking, put your mouth where your money is? That's what this is. We're simply following the money. And we want to level the playing field for you. And I got in touch with America's #1 insider. And what he's got to say will change the way you think about the markets forever. Again, executives are scooping up the company's share at near record pace. All right? We're getting word that the worst could be behind us. The world is not going to come to an end. Nothing's bad's going to happen. The market will bounce from this. It's going to take a little time, but here's the thing. Right now, it's less broad market, so the stocks that should be bought are laser focused. So there's less stocks moving, but it's easier to identify the ones that are moving in the right direction if you know where to look. Now, what he has to say will change the way you look at the markets forever. All right? Get in touch. Get in touch with America's #1 insider. I'm showing you how to do it. Follow the link below or the button at the end of this video. You can't afford to miss out on this. You really can't. I'll talk to you soon. And you guys have a wonderful, wonderful Wednesday. Bye, guys.